Pound is having a rough week. We just had some more data that just got dropped. US also some bad data that just came out today. Let's talk about it here at Capital Markets. Traders, what's up guys? Welcome back to Capital Markets. It's your host, Cleveland Bishop. We just had a lot of data that just came out regarding our G7. All right, so I'm going to put you guys back in the loop as to what's going on in regards to the fundamentals and the technicals of our currency pairs. Okay, so make sure you guys stay subscribed. Just click the subscribe button down below so you can be notified of all the videos that we come out with. And if you guys ever have any questions, comment down below. I'll be right there to answer. So kicking off, it's Thursday, but yesterday we had some massive data that came out for the pound. Pound CPI came out, expected was 2.7. We got 2.4, okay? That ended up making pound break to an all-time low for 2018, all right? This was something we said yesterday when we saw pound not having the amount of inflows of new employees from outside of the UK, right? People coming from the euro. There used to be a big business. A lot of people from the euro used to try to get jobs in the UK. Well, that number is getting lower and lower month after month, right? So that originally made pound push sell side, and now we have another catalyst, and that was CPI. We also had RPI come out. We also had PPI come out. A lot of data this week for pound. Tomorrow, we are even going to have retail sales, okay? So this pound is getting hit pretty hard. We're at an all-time low. Right now, we're fluctuating around the $30s. Here's a quick screenshot of where we can expect pound to go if the data keeps going the way it's going. $1.25 is our next major support level on the monthly time frame. Is that what's going to happen? Is the pound going to hit it back at those lows? Now, obviously, depending on the pair that you're crossing the pound with, right now we're talking about pound USD. If that US dollar starts to rally, start to gain some more strength, we will definitely see this market breaking sell side and actually having a momentous run down to those $1.25s. But US dollar also had some bad data that came out. Building permits, we were looking at 127, we got 124. So building permits are turning lower. US housing market is at an all-time high, higher than 2008, okay? And so what's happening is you're seeing more and more people inside of the economy not able to purchase and afford the homes that are in today's market. And we're seeing the application of certain loans increase for people that can't afford these houses. So for example, FHA loans, those are loans where your deposit is only 3%, 3.5%, 4%, and those are increasing. People aren't able to get out the mortgages that they were 2 or 3 or 4 years ago, right? So that's pretty interesting stuff. What is this a sign of? Usually when you see housing prices at this high, ballooning to this nature, this fast, of course you'll start to see markets turn over, but is this just a quick slump? We're not sure if this is just markets maybe cooling off for just a second, maybe to take back higher, or if this is the start of the beginning of the end, so to speak, for the actual housing market altogether. So this is something that we have to keep an eye on. The second we start to see housing prices start to push sell side, you're going to get a lower sense of confidence for the U.S. market, right? So we have consumer confidence that comes out next week for the U.S. Again, maybe we don't see it this time around, but if we continue to see building permits go lower and lower and lower, eventually you are going to see consumer confidence start going lower. You're going to see people starting to save more money. That's going to start to tie up capital, right? That's going to make it so that monetary volatility goes lower, right? Which means there's going to be less money in the economy and less transactions happening, which means there's not going to be that much of a demand for capital, which means you're actually going to get a selling US dollar, which is not good if you want to short this market down to the $1.25. Okay, that's the case I'm trying to make. So we need to see more positive things happening for this US dollar to start to have this market push down to $1.25 in regards to that GBP, but we're going to have to keep an eye on, all right? Building permits came out negative. We do have some more information coming out in regards to the US with a Fed meeting tomorrow as well. Maybe we can get an idea. Maybe they'll touch on building permits during that speaking engagement. Moving over to the Aussie, we have unemployment claims coming out for the Australian dollar. Right now, unemployment rate for the Australian dollar, 5.4%. Okay, so if we get a little bit lower than expected, that's not going to be looking good for the Australian dollar. We know right now that this Australian dollar has been hit pretty hard with all the news coming out from China. China, remember, the largest trading partner with Australia and New Zealand. If anything happens to China, you will see that reverberate in the Australian market. Okay, so we're going to have to keep an eye on that as well. All right, so guys, we'll be seeing you guys tomorrow with some more data coming in from these markets. Make sure you guys stay subscribed. If you guys ever have any questions, again, comment down below. And I don't know if you guys know, but Capital Markets, we're one of the best brokers in the entire industry. Head over to capital-markets.com to get your account started today. We have some of the tightest spreads, and we route from some of the best liquidity providers, which means you will get filled instantly and at a cheaper rate. Okay, head over to capital-markets.com. I'm Cleveland Bishop. Talk to you guys tomorrow.